Hello and welcome to another FET update. Here on the daily time frame for Fetch, we are still tracking this, let's call it a corrective rally to the upside from the recent low where the price bottomed in April. I'm tracking this as an ABC structure to the upside because we're dealing with a larger ending diagonal pattern from the November 2022 low at the time. FET bottomed locally here around 5.5 cents. And what we are tracking is a potential 5-wave move to the upside like that, with a 4th wave pullback that probably ended on the 7th of April. Problems with this chart discussed in previous updates, but the 3rd wave was too short to be really a clear 3rd wave. The pullback was a bit too deep, and the whole the concept of a diagonal is a problem in itself because we cannot really trust these diagonal patterns just because the subwaves are moving in corrective patterns. So it is a big mess, but it is nevertheless a valid pattern. The yellow scenario, the more bearish one, the directly bearish one, where we are still stuck in a correction that started in 2021, that's plausible as well. That's the problem. However, as long as we are holding above relevant micro support levels on the smallest time frames, we can still focus on higher prices carefully. Don't need to be too hopeful, I guess, but we just go with the trend, right? So that's why we track the shorter time frame basically every single day. And it's just important to understand that if the structure to the upside is really an ABC structure, then this move up here could turn into a 5-wave move or a 3-wave move. And in both cases, we could still go higher. Because if we're dealing with an ABC structure, then the A wave can be a 5-wave move. It doesn't have to be. It could be a 3-wave move as well. That's what makes it so difficult, right? But I'd say let's take a look at the shorter time frame for FET. And we can track the move to the upside starting potentially, from here, from the 7th of April. But so far only as a 3-wave move. Now, I communicated in previous updates that, first of all, I don't expect necessarily the lower trend line of the channel to hold. So I'd rather focus on Fibonacci support so we can actually remove the channel. I also highlighted that my preferred interpretation at the moment is the white scenario where I am tracking for 5 waves up. But if we break below upper support, specifically below 55.7 cents, then this is getting too deep for a 4th wave. Now, to be fair, already a break below the 50% retracement, a break below 59.8 cents would already, to be honest, be a bit too deep for a 4th wave. So already, because I've put it here, ideally the price holds here, right? So any break below 59.8 cents, and I would probably start to assume that we're already in the B wave and that the market formed only a 3-wave top. But as I said, the difficulty here is that in both cases, the market might want to grind higher, whether that's a 5-wave move up or a 3-wave move up from the 7th of April low. But if it's a 5-wave move up and we get one more high in wave A, because only 3 at the moment, right? But if we get 5 waves, then the structure would be more clearly bullish and probabilities would be more clearly geared towards further upside continuation overall. And that the actual, the reversal attempt, at the moment I call it an attempt, the reversal attempt that happened on the 7th of April is actually something that's a little bit more sustained. Now, that means we are holding above that 100% extension level at the moment. What is that for? Well, again, for the white count, we are tracking the upper support. Doesn't mean we ever have to test it. It just means this is support that should hold for upside trend continuation, right? What we are tracking here is already a 3-wave move down, A, B, C. That could be an ABC structure in wave 4. And then from there, we could watch for higher prices in a 5th wave. But it has technically space all the way down to 59.8 cents, maybe even 55.7 cents in this scenario. Any break below these levels, specifically below 55.7 cents, would really mean that the wave 4 is getting less likely here because it's really too deep. So then the focus will shift on lower support and the main support level will shift to 41 cents for this B wave correction. In both cases, the market can go higher. I think the focus now needs to be on whether the market can generate an upside impulse. Yeah, it could just be something small from any of these Fibonacci levels. The nearest one is obviously 67 cents. That's based on the internal wave structure we're tracking. The initial move down could be an A wave. And then an A wave and the C wave, they often have the same length. So that's what we're tracking here. It reached this level, ideal target, but no clear response to the upside yet. So at the moment, it means being on the watch, I think, for a potential reaction, but it really takes a break, I'd say, above the B wave high at 78.7 cents to suggest we are moving towards 91 cents plus for the next move up. That's the update on FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.